What is going on YouTube? It's Sankey and I make videos on the stock market. As always guys, I've got a jam-packed one for you today, but before I get cracking, if you don't already have a Trading 212 account, you can download it using my link down below, open up your account and you get a free share of stock. You can jump in and join us on these plays and kickstart your investment journey. As you guys know, my aim is to help you build wealth in the stock market. We want to get your portfolios to a level where you can comfortably eat from it. As a matter of fact, we want your kids to be able to eat from it and your grandkids. We call that generational wealth. You guys know I come on here each and every day to help you guys, support you in your journey, give you that cheat code, right, to achieve that long-term success in the stock market. And guys, getting to that end goal depends on what we do today. So without further ado, let's jump into the first play. Alright guys, so as I've been saying all throughout the year, we want to be well positioned in all the mega trends in 2021 so that we can crush it in the stock market this year. Now I'm going to be presenting to you guys a couple of cannabis plays, and this could act as explosive growth potential for your portfolios. You have to remember, with the Democrats in the position they are in, right, a lot of these plays can benefit massively from the change in regulations that are likely to unfold throughout this year. And even without these regulations, these plays had a phenomenal 2020, so you could only just imagine what they're going to do when their full potential is unleashed. First up, Grow Generation, that's ticker symbol GRWG. Now the patrons know about this one. The first thing I have to say is they're listed on a major US exchange. Now a lot of their peers within this industry are not listed on major US exchanges. This gives Grow Generation a massive advantage above the field because it gives them access to bank financing, right? So they can go and take loans, finance their business via that route. A lot of the other plays, right, are not listed on major exchanges, which means that they have to use clever ways to finance their company, and I'm going to get into that later in the video. Now, with access to bank financing, it means Grow Generation can get the loans, get the money they need to scale up their business as quickly as possible, and that is just going to drive us more shareholder value. Now, this is a rapidly growing business, and I want to put it into perspective for you guys just how quickly they are growing. So in their latest financials, they came out and said that they're going to do 350 million in revenue in 2021. This represents an 80% increase over 2020 results. And you guys know I like to see companies with consistent growth year after year. I don't want to see any flukes in their growth performance. So in the year prior to that, between 2019 and 2020, the company grew over 100%, right? So this is a rapidly growing business year after year. Now, one of the ways that they're growing, right, is by acquiring new sites. And they're just ramping up and acquiring lots of different sites. So in 2020, they acquired 14 new sites. This brought their total to 39 sites, and they're set to do the exact same thing next year. Ramp their number of sites up to 55. Now there's a total number of 1,000 store locations in the US, and Grow Generation have come out and said that they're going to take on about 16 of those. So as you can see, the total addressable market is absolutely enormous, and there is the potential for them to acquire even more than what they've come out and said. Now in terms of catalyst for that stock price, any positive change in regulation is going to push that stock price up, and it's going to bring the rest of the industry with it. Just to put on your radar, we've even had the governor of New York come out recently and say that he's looking to legalize recreational cannabis, right? So we can see that different states, right, are moving in the right direction to support these plays. Another catalyst to put on your radar is that Grow Generation are very acquisitive. You guys know I like my companies that go out and acquire different businesses, right? Now, just in December alone, they've acquired 2 different businesses, one called Canopy, one called Grassroots. So we can expect it's only a matter of time for them to go and announce that they've gone and acquired another business. And all this is going to do is going to give that share price positive momentum. Guys, I don't think we're far away from seeing Grow Generation hit $60. They've hit a little bit of a dip today, so it looks like a good buying opportunity if you're considering jumping on this play. Up next, we have Cresco Labs. Now, different to Grow Generation, they're not listed on a major exchange, so they don't have access to that bank financing that Grow Generation has. But this could act as a catalyst down the line, because you guys know a lot of our plays have either announced or making plans to uplist to major exchanges. So I wouldn't be surprised if this is on the horizon for Cresco Labs in the very near future. Now, a real asset with this play is their collection of brands. If you just take a look at their website, you'll see exactly what I mean. They sell these through their 22 retail stores and then through wholesale as well through their 700 dispensaries. Now, they are also going to benefit, right, from the move to legalization in New York, but also Arizona as well. So I just want to put this on your radar. This is from a press release. We are seeing Arizona can expect to see dispensaries begin to sell recreational marijuana as early as March, as the drug was legalized by voters in November. So guys, you can see that a lot of states, right, are moving in the right direction, and these plays are going to benefit significantly from that. Now, another one I want to put on your radar that we have in the portfolio is Curaleaf. Now, they're one of the largest in the game. They operate through 23 stores and 96 dispensaries. Now, again, they're set to benefit from the same catalyst that's going to drive Grow Generation and Cresco. And you guys know I'm big on diversification, because not only are you mitigating the risk, right, but all of these plays have their own different strengths, and by adding them, you can benefit from all of this within your portfolio. So consider adding Curaleaf to your portfolio, as well as some Grow Generation, as well as some Cresco. Up next, we have Innovative Industrial Properties, that's ticker symbol IIPR. Now, this is a bit of a different one to the other plays that I've mentioned, and they act as a bit of a hedge against those plays. Now, let me explain why. If you remember, I said that those cannabis stocks that aren't listed on major exchanges have difficulty accessing bank financing, right? So you have to get creative to get some cash. So what they'll do is they'll go to an IIPR. IIPR will buy the facility, the property off a Cresco, for example. Cresco will get an amount of cash, and then Cresco will lease that property back from IIPR, and Cresco can use that amount of cash to fund their business, go and acquire new stores and grow, right? So that's why I like IIPR, and I say they're a bit of a hedge, because if there's any case that regulation doesn't come on board, right, to allow cannabis stocks, no matter what exchange they're listed on, to access bank financing, IIPR are still going to be at the forefront of their business. Now, if that regulation does come on board, we might see rates drop with IIPR, and we might have to exit that business, because maybe they're not going to be as growing as fast, because those other stocks have the cash, right, from the banks at a much cheaper rate than doing the sale and lease back from IIPR. Again, for now, this is a brilliant one to add in your portfolios, and they're winning a lot of business. They're acquiring a lot of cannabis facilities, and they are growing very nicely. So I like this one. They're in the portfolio. All right, guys, so it's the session on catching a runner. I give you guys the tools, insights, and tips to enable you to catch a stock before it explodes. So one of the things you might want to look out for when you're trying to catch a runner is the size of their backlog. Now, if you don't know the backlog is orders they've received, but they've not yet fulfilled. I'm going to give you guys two examples of stocks where the backlog indicated to me that stock price is going to soar. So the first one is NEO. So remember, when NEO was consolidating between $41 and $48, right, for a period of weeks in November and early December, and I kept telling you guys, buy the dip in NEO, because they're soon going to break through that resistance, and it's going to be onwards and upwards for that stock price. As I was paying very close attention, right, to the size of their backlog. Now, we knew that NEO needed to hit around 6,300 deliveries in December to be within the management's guidance. The month before, they did around 5,200 deliveries, right? And if they didn't hit 6,300, us investors would not be happy. And if they hit above 6,000 comfortably, then okay, that gives that share price some momentum to run. Now, the size of the backlog in October was around 7,000 vehicles, right? And it takes about 8 weeks for NEO to deliver their vehicles. That means in December, they're working through that October backlog. That backlog was well above the management's guidance. So that's one of the reasons why I knew that stock price would rise up, right, and shoot through that resistance if they can just work through that order backlog. Now, the second one is Orbital Energy Group. Now, they've been on an absolute tear over the last couple of weeks. And again, I've been paying close attention to the size of their backlog, and their order backlog is growing rapidly, right? For a business of their size, their order backlog is very strong, and the growth is even more impressive, right? I think the last recorded figure was around $52 or $56 million. So this is one thing for you guys to look out for when you're trying to spot a runner, because if the size of the backlog is high, then I think you've got a runner. Alright guys, so if you've been rocking with the channel, you know what time of the day it is. It's question of the day time. Next question comes from Helder. The question is, I understand this is not financial advice, but I'd like to ask you how much you'd recommend putting into these penny stocks. So this is a great question. It's going to help a lot of people out. Guys, if you have any questions or comments, or companies you want me to look at, leave them down below for me. You guys know I spend a lot of time in my comment section, so do make sure you comment for me. Alright guys, so this is how I do it. With my portfolio, 97% of my portfolio is what I call long-term holds. That's anything over 12 months, right? Now, the plays I've given you guys today, they go in the long hold category. I see a lot of catalysts playing out over this year, which is going to help that share price. Now, in terms of penny stock investing, I call these short-term holds, and I can get out in any period of time. It could be an hour, it could be 24 hours, it could be a month, right? So 3% of my portfolio is penny stocks. Now, if you look at my portfolio is around 68,000 right now. That means I'm not allowing myself to invest more than 3,000 into penny stocks. Now, I do it like this because I see that 97% long hold portion of my portfolio as a way to build long-term wealth in the stock market, right? And there's an element of risk protection there. With the penny stocks, the 3%, I see it as a way to have a bit of fun in the stock market, blow off a little bit of steam, but I'm also looking for those penny stocks, and I said it before, that can graduate to the long-term plays, right? That show me, okay, they're moving their business along, they've got some good catalysts, right? There's some good momentum, and they're operating in a fast-growing industry that's going to help them propel to the next level. Now, we've got numerous number of players that have elevated from that penny stock status to the long-term growth status. One of them is Nia, right? And one of them that we're working on right now is Jiva. You can see that stock is flying right now. And I've gone through, you could check out the video I did yesterday, talked about Jiva and how they're positioning themselves for future success, right? And you can see one thing I'm also looking for is the volatility on a penny stock play, right? When I see volatility starting to slow down and they're stepping up their business, okay, it's time for them to get a little bit more portion of money within my portfolio, right? Now, one thing I will say on a closing note is if you're not comfortable with the amount that you've invested into a penny stock dropping 40%, right, then you're probably investing a little bit too much. So any of the penny stocks, any of the money that I invest into the penny stock, I don't mind it dropping 40% in the short term. I'm comfortable with that, right? Because I know that it's a very small amount compared to the overall portfolio. So that's just something for you guys to think about. As always, thanks for rocking with Stock Flicks today. Do hit the like button for me. And also, if you're new, hit the subscribe button, become part of the family. Check out the link down below to the Patreon also, where I share a bunch more stocks over there. We recently entered Beidou and they've announced an exciting EV partnership. So I do expect good things for that stock. They're also notified whenever I buy or sell. They're notified about all the stocks I've shown you today. And some of them are run up. So if you don't want to miss out, join us over there. So as I always say to you guys, check in the channel each and every day. Stock market is rapidly moving. And I'll catch you guys on the next one.